Welcome to Dukascopy TV. Joining me today is Jean-Francois Owczarczak, taking us through the statistics that's happened this week. Welcome.
Hi, Alex.
So, lots of data from Europe is coming out this week, a bit from the US with the home sales and consumer confidence. But first, talk us through euro-dollar tanking and Swiss gold.
Well, we're back on our FinGraphs mosaic on fingraphs.com. We have a mosaic here of what we usually have a look at on Dukascopy, so euro-dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures and 3 months Treasury futures. We'll start with the euro, which had been correcting up over the last 2 weeks until Friday, when Draghi came in and announced that quantitative easing in Europe would be extended to asset-backed securities. And so that is a big push for further quantitative easing in Europe, and the euro took a new dive. So let's have a look at it. This is an investor view, so it has a weekly chart for long-term perspective, the perspective over the next few quarters, a daily chart for the perspective over the next few months, and an hourly chart for the perspective over the next few weeks. Now, the weekly chart has been heading down all through the year. We still think there's a potential down, and a potential that could lead us below 120 down to about a 111 over the next few quarters. It seems like we are in a bit of an exaggeration at the moment on the envelopes, but on the risk index, we're still in the middle of the range. So we might see a few bounces here longer term, but we're not in an exaggeration position yet, so there's more to come. Now on the daily, we're heading lower, we're quite oversold, the risk index is in the green. It has seen 2 corrections already, but we still think that it could make it lower into what we call impulsive 2 targets. These are our most aggressive targets for very extended moves, but it could lead us below 122 and down to 119 over the next few months. So it seems like medium term, euro is still heading down. Now on the hourly, we had been correcting up. We never made it above our corrective targets, and maybe I would want to show that because we have a new functionality that actually allows us to go back in time on every one of our charts. So if we go back here, we can see that we were in a corrective move up, which would stay corrective as long as we stayed below 126.20. And basically we fulfilled those targets and then moved back down into an impulsive move. So back to today, we're heading lower, impulsive down, and the targets are between 124.27, we're below them this morning, but could lead us over the next week or so down to 123. So still negative on euro-dollar at the moment. On all 3 frequencies, bear, so potential continuous downtrend. Now, let's go into the mosaic again, and let's go to gold. Gold has resisted much better than the euro against the dollar. There may be an effect of the Swiss referendum there. Some expectations about it. We don't think it's that important an event, but it may have, as the referendum is at the end of this weekend, some short-term incidents. Now, back on an investor's view, here we have a weekly, a daily, and an hourly. The view over the next quarters is for us still heading down. We've reached the initial high end of our impulsive targets. The oscillators are quite oversold, but we can't call it all clear yet. We think there's a bit more to go. Maximum potential would be below 1,000. If we take an average here, it's around 10.50. So we believe there's probably another $100, $150 to go over the next few quarters. Now, if we look at the daily, we're quite exhausted, have seen a bounce here, but in theory, we're still heading down. And we've reached the initial targets here, but we could still make it down to 1100 to 1110 over the next few months. Now, on the hourly, what is crucial here is the 1200 mark. It was basically our corrective targets. We went slightly above them last week. Now, it wasn't really a very strong move. I'd wanted to retest above 1200 to call the all clear for an impulsive move up. That could lead us to 1240, 1270. But as said, I think that 1200 is still working its way, and it's strong resistance. So we wouldn't be surprised if it just stopped here and resumed its downtrend also. Just taking back on the perspective of the daily, why is this 1200? Well, because it was our corrective targets on the hourly, but also because you had a strong support here during the month of October, which is now serving as strong resistance to the upside. And the next step would be that if we were to attack the previous support levels, which were here around 1250, and which also served as a resistance level here around 1250 during the month of October. So as for gold, still heading lower over the medium to the long term, and the 1200 really needs to be cleared to expect anything else in the short run. So let's have a look now at Euro-Swiss and talk about the Swiss referendum, because basically that's where the point of concern is. Over the last 3 years, the Swiss National Bank balance sheet has ballooned up to $500 billion. About 80% of it is in foreign currencies, and most of it is in euros. And I just wanted to go back historically as to why that happened and why the Swiss National Bank actually introduced a 120 floor against the euro. So we'll go back in here in our list and go to a Euro-Swiss chart. And we'll use our backtracking functionality to go back to when those important decisions were actually taken. So in 2011, and I'll go to the 10th of August. And just to give you the scope as how violently Euro-Swiss was attacked at the time, you could see there that it had tanked from about 130 in the beginning of April to close to parity. So that's in a matter of 4 months, which is quite impressive for a currency. And on the very short term, over the last month or so, it had tanked from 125 to, and I think the bottom was around 101. So almost 22% on a currency in a matter of 6 weeks. That was quite aggressive. And so there was a very high concern about deflation in Switzerland and high uncompetitiveness leading to negative growth. And that's why basically the central bank came in at the time and introduced the floor, and euro-dollar bounced back to reach that floor quite rapidly into the 120s at the time. Well, I won't go through all of it, but that's pretty much it reached the 120s very, very quickly. Now, what's happening today? Well, pretty much the same thing. If you look at euro-dollar, we're pretty much stuck on that 120 floor. And if that gold initiative actually goes through, and that provided all the concern about the ballooning balance sheet, the first thing, they tried to defend the euro. And for every euro they're going to buy to defend it, they're going to buy 20% of gold, which we won't be able to sell. And they'll have to go on doing that forever. So the balance sheet is just going to balloon up even further. The other possibility is they let Euro-Swiss go. And given the strong movement that we saw in 2011, we could well think that Euro-Swiss is going to tank quite rapidly. And now when you have 80% or 75% of your reserves in euro, that's a lot of capital loss for the central bank, and it could probably put it on the brink of bankruptcy, which would probably not be very good for the national bank credibility. So there is a problem. The balance sheet is ballooning much too quickly. I'm not quite sure the initiative is the right answer. Now, let's move out from there and go into equity markets. Equity markets are still heading up at the moment. We had turned endlessly that the market was still good on the weekly chart. It's quite overextended. We're on an I2, but we could now make it up above 2,300 over the next few quarters. We had been more cautious on the medium-term perspective, and we still are. Although we're still on an uptrend, we've reached the targets here, and we're pretty much at stress on our risk index here and on our envelopes. But at the moment, the short term, the hourly is still gradually heading up, although it has reached its potential. So we really need to see some weakness on the hourly here to call some kind of a consolidation, which hasn't happened yet.
So you mentioned Draghi earlier and his quantitative easing. Do you think that's the right move for the equity markets?
Well, it's certainly going to help, and it's certainly giving a lot of confidence. We've seen European markets, which had been weaker than the US, really take a rebound at the end of last week. And so in the short run, at least, it's very good news for the equity markets in Europe.
And what do you think that our viewers should look out for in the coming week?
Well, I think the data is quite important. There's quite a lot of US data at the beginning of the week to see if the momentum in the US can be kept. And then all the US is going on Thanksgiving from Thursday on, but we have a German and European PMI and I believe German retail sales coming out. So these are going to be quite important to gauge the health of the European economy.
Thank you for your time.
Thank you very much.
We'll be back next week with more information from FinGraphs. See you then.